Today we'll be talking about world of conflicts. This will be a more political heavy video. We'll try to be more impartial when discussing politics. It is important when it comes to study of economics. Economics is under political science for most universities. The point is that by understanding politics, understanding not what politicians are saying, but rather what they're doing and what is the benefit of doing so and what is the benefit that's encouraging them to do it, then it helps us form the kind of understanding for what would be the implication and kind of helps us in our decision making. These are the topics we'll be going over today. First up, we'll talk about Russia-Ukraine conflict. It's not going to be a deep dive. I'm sure a lot more other people have talked a little more in depth about it. I just wanted to bring it out in terms of the kind of high level, like why did it happen and like where are we now. I do want to note one thing, like in terms of war and like battle in general is a no-sum game, meaning anyone's gain has to be someone's losses, and usually, it costs one more than what they gain. It's not so much about, like, I like more win-win situation, but, we can do is play the cards that we're being dealt, and, as big powers around the world are making decisions, I'm really not in a position of power to do anything about it, but rather just kind of observe, kind of get the implications, and try to do what's best in terms of protecting myself. My point is that whatever happens. I can't control it. So don't come at me to say like, oh, it's bad. Well, yeah, it's bad, but what can we do about it? We're just kind of do our best here. Then we'll talk about the Nord Stream 1 and 2 being the natural gas pipeline from Russia to Europe, because there's currently some leaks in the two. And so then we'll also talk about who's behind the leak. Then we'll talk about, Bank of England announcing QE. They mentioned, it's emergency, but also temporary. We'll see, if that's really the case. Then we'll wrap up with questionable U.S. economic indicators. So Russia-Ukraine crisis, how did it start? The kind of main reason, in my opinion, was that NATO was in talks of taking in Ukraine, which means that NATO can have missiles in Ukraine, which is in front of Russia, and Putin wasn't a fan of that. There are underlying conflicts, from religion, cultural, and other, because the whole region itself, it's throughout history has been a lot of pushback, back and forth in terms of the ruling nation, especially when Lithuania was more stronger in history as well. Obviously USSR. So there is a lot of underlying conflicts, and in terms of the regions on the on the side of Russia and Ukraine, there's a lot of ethnically Russians as well. So all that kind of comes into play. So what now? The referendum to join Russia. So it's kind of funny how Western countries are condemning this referendum, where supposedly Western countries are all supposed to be like, hey, we're democratic countries, we support everyone choosing what they want, one vote per person. And when Putin was like, you know what, sure, let's do it, and put up a referendum for the 4 provinces to see what they would like in terms of whether or not to join Russia, and it turns out quite a few do. And obviously there are counter arguments saying like, hey, Russia's already occupied the areas, like obviously people will vote to say yes because they don't want to get hurt. Well, let's see what happens to those people who say no. Then, if nothing happens to them, I don't know. Um, but it's just kind of funny that the irony that Western countries or leaders are saying, hey, this is not democratic, um, when like we condemn it, we don't accept this. Well, it was, at least it seems at the moment that it would be a democratic decision, and it looks like it is more favorable for these provinces to their willingness to join Russia. So we'll see how that continues. Next up, we'll talk about the Nord Stream 1 and 2 pipeline. So in terms of the pipeline itself, it's made of coated steel pipes up to 41 millimeters thick, and on top of that, on the outside, there's a concrete layering. And the point I want to bring with this info is that these are difficult to break, like pipelines. They're meant to survive for like 50 years, and on the bed of the Baltic Sea. So that means it's not easy to destroy or like make a leak in it. It has to be really deliberate efforts, and only limited individuals would have the capability and capacity to do such a thing. Now that we kind of covered briefly how it is difficult and not easy for anyone to cause any damages to the pipeline, well, let's talk about who's behind the leak. It's kind of funny, like on the right here, I found this, someone tweeted about how, did Biden really just kind of let it slip way ahead of time? So first question, first suspect, obviously someone's going to point to Russia. Hey, did they just bomb their own pipeline? Well, why would they? If Putin really wanted to just, cut gas supply to Europe, not only like is that their, main source of revenue, so for some reason Putin's like, oh, you know what? I don't want to somehow sell natural gas to my biggest consumers. It doesn't matter what gas price is if you can't sell it to someone, right? Can't he just turn off the gas supply maybe for a month or a week and be like, hey, can we negotiate a better deal here, instead of like bombing it or making a leak, because that maintenance is going to be a lot more difficult. And it's kind of also funny that CIA warned about the attacks, and also a week before to Germany specifically. Maybe this is kind of covering their own tracks. We'll see. There has been the amphibious assault ship. I think there's 2 of them that was spotted near Nord Stream 1 and 2 in the suspected leak areas. I think it was 30 kilometers and 50 kilometers. So, and here's the question: like before we point fingers, let's just think about who stands to benefit from a leak of the Russia to Europe pipelines. Like, who is the benefit? And once we determine who would benefit from this, we would most likely can have a higher, confidence in who did it and who stands to benefit. Well, it's U.S. LNG, because if Europe can't get its natural gas from Russia, then that increases the demand from U.S. liquid natural gas. So, who's behind this? Well, I also found, so these are just kind of the support for what I found. I know the Twitter post about the U.S. amphibious assault ship. Maybe that's not as credible, but my point goes back to who stands to benefit from this situation is most likely who have the biggest incentive to do it. Now let's take a look at the Bank of England announcing QE. So BOE probably did this in terms of a lack of liquidity and a weak economy. And why is this important? Is that Bank of England would normally seen as a ally for the Fed, and if one of its allies, so we kind of talked about this a little bit in the last video, where we're seeing signs of wavering in the Fed's allies in terms of their uh, together goal. And does this mean that other central banks will also follow suit if their economy also shows signs of weakness? And this again goes against Fed's plan. Why is that? Why would that be? Well, if Bank of England announces QE, it helps its internal economy a little. Funds will no longer, like invested capital would not consider leaving England as much because they can borrow cheaper. They and in terms of the domestic demand will also be helped. They can buy more stuff now from China as well. And so again, this is going head on into the Fed's plan, and this again will have bigger implications if more and more of the Fed's allies starts wavering. And we'll see if that has anything to do with the Fed's continuous goal to either keep tightening, or would that possibly have any implication in terms of future pivoting? Like either maybe the Fed will have to stay stronger for longer because its allies is not doing as much, or would the Fed be forced into doing the same thing? So again, these are things to continue to observe. Finally, let's talk about some questionable U.S. economic data. So new ones that just came out: U.S. new home sales, August month-over-month sales is up 28.8%. Like, who is buying all these new homes at such high, maybe not historically high mortgage rates, but at least like for recent decades is high. Like, I don't want someone telling me that back in my day mortgage rates was like 20%. Like, okay, that's fine. I'm just talking about recently. So the question is, who is buying all these homes at such high mortgage rates? So that's already kind of questionable. Next, we have the U.S. consumer confidence level. So September, it's up by quite a bit comparing to August number. Like, who are these consumers that are so confident? Especially when the stock, like, so when you think about consumers, these are pretty much retail investors, and usually the consumer confidence level kind of goes a long way with the equity market performance. Like, when the stock market fell the whole month, who was being so confident? Is inflation all of a sudden like much lower now? Like, who is so confident right now? And then we have the U.S. durable goods order. So year over year, it's back to double digit in terms of like percentage wise. Like, who is ordering all these goods? I was reading like credit reports being consumers are behind, like they're loading up on debt because of inflation, so they can't buy as much things anymore. Like, and we're seeing like Asia and Europe exports are down. Like, where are all these orders coming from? Is it from domestic production? Like, is U.S. domestic goods production being that good? And so the question again is like, who would want these indicators to show a rosy picture? Well, the Fed again. Powell needs a cover to continue to justify tightening. And as long as they're able to possibly falsify some of these data, the Fed continues to have that excuse saying like, economy looks great. Like, look at all these indicators, and because of that, we have to continue being strong on our tightening stance until again his point is bring inflation back to 2%. Well, you're way behind the curve on that, so that can't be it. So, again, we go back to what is the Fed fighting for, which is the last video. Thanks again. So I thought I'd wrap up with some market update. So bond yields, we're seeing the peak of 10-year US Treasury around 4%. So I think in terms of the bonds role in this bear market has been fulfilled. We see a big drawdown, and now that it looks like it's ended in the short term. Again, my opinion, long term bond yields have a long way up to go, but in terms of so far in this kind of big flush of US Treasuries, I think that might be the peak. US equities, as long as it holds above June low, then we can see like a double bottom. But again, my opinion is that it's more likely, unless the Fed comes out. Again, this all hinges on the Fed. If the Fed comes out pivot, then we can see, a spectacular rally and the end of the bear market. But otherwise, I think it's more likely that we'll have a bigger wave down, which is the last leg of the bear market, with fear and panic. We'll see the VIX spiking, and if this slight rally fails to break, remain above the June low, and it breaks below, then we'll see the last leg. DXY, US dollar. So if it breaks and stays below 113, then I think the peak might be in, and possibly looking for 80. We'll see how that goes. Oil, it still needs to hold above 80, otherwise risks lower. Again, long-term wise, I still expect oil to have a long way up to go. However, in terms of, again, short-term, a lot of political factors in play, but long-term, more structural, meaning like long-term reinvestment, sustainable reinvestment, where short-term is a lot more political, and with US needing lower oil prices for midterms and so forth. Gold still need to hold above 1600, and breaks above 17 to confirm the bottom. Otherwise, we risk lower. Again, all this would be reversed if the Fed shows weakness. So far, in terms of gold and other currencies, they're doing well because other currencies are devaluating. But since US dollar has been strong, that's why gold has not been doing too well. But again, we'll see how this continues to develop. If it stays above 16 and it breaks 17, then should be good to go. And also another thing to watch again would be the US dollar index. Thanks again.